Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady and the principal owner of Everett Tax Solutions, where we help you win the tax game. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the small business community. Okay, on a previous video, I mentioned about a substitute for return, and then I got a lot of questions about it. So here we are with this video to help you understand the substitute for return, understand the process, and know how this process is happening. So our tax system is what's called a voluntary compliance tax system. Now let me explain what that means. That means that you provide the information to the IRS, and you are essentially telling the IRS, hey, this is how much I owe in tax. And then the IRS retains the right to audit those returns. Generally speaking, you have 3 years to claim a refund. Now, there is no statute of limitations on unfiled tax returns. So a lot of people think, oh, well, if it's past the 3 years, you can't make me file. That is not accurate. You have 3 years to claim a refund, but there's no statute of limitations on unfiled tax returns when you have a tax liability, okay? Now, a substitute for return is really not your friend. I actually had someone say to me, well, if the IRS is going to just file a return for me anyway, why do I need to bother? Well, the SFR, or the substitute for return, is not a timely filed return. This is a tax return that is for delinquent taxpayers who have several years of unfiled taxes, back taxes as you know them. And so what the IRS does, again, it's a process. They will send you a letter that says, hey, we believe you are supposed to file a tax return. We have not heard from you. Here's your opportunity to do it. And once you get that letter, you have 30 days to file your return, respond to the letter explaining why you haven't filed a return, if there's some extenuating circumstances, or if you believe that you were not required to file a return. So you got 30 days after that. Now, normally by this time, if you file this return and you are due a refund, 9 times out of 10, that refund is gone. After that 3 years, that refund belongs to the Department of Treasury. But again, there's no statute of limitations on you owing, okay? I want to make that clear. And this is why you want to file on time. So again, you get this reminder letter that says, hey, Lysandra, we believe that you were supposed to file a return. We have not heard from you. So you have 30 days from the date of that letter to get your return filed or respond to the notice that the IRS sent you. After that, the IRS will file a substitute for return. And what that means is they take the information that they have on file from you from third parties, whether it's a W-2, a 1099 miscellaneous, whether you've got interest statements or whatever from, investments or whatever. All of this stuff has been reported to the IRS. And one of the things I want to make clear to you is that if you get a tax document in the mail, there's a copy waiting at the IRS for you. And this just waiting for you to file this return for the computer matching. And then if they don't get it, that's when they start saying, hey, we haven't heard from you. Okay. So they take the information that they have from the third parties, and then they file a return. Now, the thing about the substitute for a return is that it doesn't take into account anything. It doesn't take into any tax credits or anything like that. They will file you single or married filing separately. You get the standard deduction, and that's about it. If you have business income and expenses like the 1099 miscellaneous, they're not saying, oh, well, we think that Lysandra's got X amount of expenses and then they deduct that for you. No, they say, hey, you've made $1 million online and this is what we're filing this return based on. And then you get a notice that says, hey, we want our money. Okay. Now, even though the IRS may have filed that substitute for a return for you, it is generally not a good idea to let that lie, because more often than not, the return is incorrect because, again, they don't take into account any tax credits, any type of tax deductions. If you have, like a mortgage statement and all that, they don't take all that stuff into consideration. They just say, hey, here's the income, here's your standard deduction. There you go. Okay. So when it comes down to, filing back taxes and all of that, you really want to do that to make sure that the information is correct. Because if they're saying you owe us $50,000 and you really only owe, 400, well, it's going to make sense for you to file those returns and get it corrected, right? So that you're paying the correct amount of tax. Now, you're still going to have failure to file penalties. You're still going to have failure to pay penalties, and you're going to have interest that's accruing on any of this tax liability that you may owe. And if you happen to have, been due a refund and it's past that 3 years, then you're not going to get that refund. It belongs to the Department of Treasury at that point. So this is why it is always a good idea to file on time, even if you owe, because number one, you reduce the failure to file penalty. That's the first thing. But secondly, you have filed the return, you filed it accurately. And so if there is a tax liability, then you know what that is. And it's not just what some computer just spit out at the IRS, not taking anything into consideration. When you filed your return, you've taken you've gotten the tax credits that you're entitled to, you've taken the tax deductions that you're entitled to. If you have business income, then that's your opportunity to deduct the expenses that you're entitled to deduct so that you come up with a good number with what you may owe the IRS. So, bottom line, a substitute for return is not your friend. This is not going to be a timely filed return. The IRS is not going to contact you if they owe you money. Okay, if they owe you a tax refund. Now, if you have filed and you are due a refund and they're taking a while to get it to you, then you'll get interest on that, and you will also get the 1099 INT interest statement to go along with that, which is going to happen for a lot of people in 2020. Okay. A lot of people in 2020, their tax refunds have been delayed. The IRS has said, hey, we're going to pay interest on those tax refunds. So just make sure that you know that if you got interest on your tax refund, that you're going to have to claim that interest as income when you file. That's a total aside, but just, we just got there, right? But file your taxes on time, you guys. That's the best thing that you can do to manage your tax life. And then there are ways for you to manage your tax debt if you can't pay that tax liability when it's due. Okay. So I hope that helps you out, clarifies what a substitute for return is and how it is really not your friend. All right. So thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here to get your questions answered about your small business taxes. All right, have a great day, and I will see you all next time. Bye.